Hi guys, hope you're all doing well. Jack Corsellis here. I want to take you through a recent trade of mine in one of the strongest lithium stocks in the market, SGML, Sigma Lithium. Now this is a trade where I completely messed up the trade management, subject to my own rules, how I manage positions. So I want to be taking you through that and highlight the mistake I made in the hope that it may help some of you out there. So what I'll do is I'll give you an overview of the 4 parts of trading which I think are key to master. That's going to be number 1, identify high quality setups. Number 2, controlling the risk. Number 3, mitigation of risk. And then the 4th part, which is the part I messed up here, the optimizing profit. So let's get into it and let's start off with the identification. So what my eye is already being drawn to, Sigma Lithium here has a history of being able to build some VCP type bases, tighten up on these key moving averages and break out. Certainly in here as well, tightens up around the 1021 50 SMA. See how the volume dries up, 52-week highs on the RS line. This stock here is a leader. So I'm looking at this as it sets up over here as a continuation type base. So let's just zoom into it. So what am I looking at when I'm looking at this stock over here? And let's just pull some of these down so it's a little bit cleaner. Okay, something like that. So what I'm looking at here is the stock pulls down. It then has a bullish engulfing candlestick on a gap down and then reversal underneath the 21 EMA, reclaims all the key moving averages, pulls back down to the 21 EMA, shakeout demand tail, inside bar, and then you see how it just goes here, tight on the 10 EMA, and look how that volume just dries up for 2 successive days below the 30-day average, 52-week highs coming through as this base is developing, just telling me this is one of the strongest stocks in the market. Now I like to utilize multiple time frame analysis, so the 4 time frames that I use most commonly are the monthly, weekly, daily, and 1 hour. If it's in my trading account, I'm using more so the daily and the 1 hour chart to help pinpoint those entries as specific things that I'm looking for on the 1 hour, which I'll take you through in a minute. If it's in my longer term accounts, then I'm more focused on the monthly, the weekly, and the daily. The weekly and the daily are the 2 that I spend most time on in those accounts. So let me just go down to the 1 hour chart here. So I just want to show you the whole identification of the setup. So when I'm drilling down here, okay, there's some things that I want to be looking at, and we can already see here, see how it's building these high lows. Look at all the demand coming in on this rally, the demand coming in on this rally. See this nice big shakeout demand tail. Look at the volume coming through. So this is shaking out weak hands, no consistency of any supply, strong reversal bar coming through here for the first 1 hour bar. And then do you see here, certainly in the last session, do you see how tight the price action gets? Look how the volume is just drying up in here as well. This is what I like to see, and again, this is the same behavior you'd like to see, say, on the daily chart. These multiple tight candlesticks where volatility just contracts, the volume dries up. Why? It's just telling you there's very little supply which is coming to market. I like to use the marathon runner analogy as well. So when I'm targeting an entry, I like to see that price is very close to where I'm looking to enter. Think of it as if you were going to run a marathon race, you'd like to start as close as possible to the starting line. Why? Because you don't want to be expending energy just making it to the beginning of the race. You just want to start bang on the starting line. For me, it's the same with price. I like to see price within a very close distance of wherever the pivot point is I'm looking to buy. So here you can see it's basically within 1%. That's absolutely fine for me. So let's go back onto the daily chart, pull this over. Okay, there we go. So what I'm thinking here is I'm targeting the setup. So I'm targeting it through the high of this bar here, which is on the 7th of September. If you want to go take a look at that by yourself on TradingView or whatever. So 23.86. That there is where I have a buy stop limit order set, attaching my stop loss, and my stop loss is placed underneath the low of the 7th of September. So underneath the 10 EMA. So that's how I'm thinking about identifying it. That's how I'm thinking about controlling it as well. Now, as soon as I'm filled on the position, my objective then is to mitigate the risk on the trade. So what does that mean? It's a Sun Tzu quote from The Art of War. Position myself beyond the possibility of defeat. So the levels to remember are, if you want a free roll, it's either half at 1R, 1/3 at 2R, 1/4 at 3R. Now, of course, there's some adaptability to this because you could slightly push your stop loss up. That then changes the level to then free roll. But in this case here, when the stock starts breaking out on the 12th of September, I sell 1/3 at 2R to free roll. So I've now free rolled the trade. So I have 2/3 of my position there, and I'm there risk free, subject to a large gap down, a lot of slippage. But then my mindset is, okay, I'm there for free. I'm there for nothing. This stock can do no damage to my account equity line. Can I now go get a 50% gain, a double, a treble, a quadruple, a 10x? That is my mindset. I'm then trying to ride the intermediate term trend to the best of my ability. Now I have no idea when I'm taking the trade or thereafter, I have no idea whether the intermediate term trend is going to be 5%, 50%, or hundreds of percent. I have no idea. I just want to be trying to ride the intermediate term term trend, utilizing the 10 EMA and also the 21 EMA. If price starts getting really extended from the 10 EMA, I may look to choke some off by going low the day, lower the day, lower the day. But for this kind of video, just imagine I'm trying to ride the 10 EMA and 21 EMA. So the stock gets out really well here. Okay, I have a decent gain on the position here, just over 20%. So now that is absolutely fine. If I just do a drawing here, hopefully it will kind of sink home. So what I'm trying to do, let's just draw a VCP. Okay, 1 contraction, 2 contraction, 3 contraction, breakout, test, reversal. And let me just draw it a little bit different actually, because this is what happens more commonly. 1 contraction, 2 contraction, 3 contraction, breakout, test, reversal. So this is what I'm looking to do. My entry is here. I appreciate that's all a little bit skew-off, isn't it? But my entry is here, and then looking to free roll here, and then trying to sit through the testing action of the pivot point here, which will happen in the vast majority of cases, and then I'm trying to ride that intermediate term trend after the test. Now, where I messed this up is what I did was after a couple of days here, I think it was on this day here. Okay, I was actually traveling with the family, so I made some kind of BS reason that I'm traveling. I'm not going to be spending as much time in front of my screen. I'm going to move my stop loss on the remaining 2/3 to break even. Now that there is just a BS reason for doing it, because it's not my rules for how I manage a position. Okay, I'm not a short-term momentum trader, whatever you want to call it, who's trying to capture and optimize profits in maybe a 3-5 day push. I'm not into that. I'm not looking to do that. So if you were doing that, then it would be a brilliant sell to be selling either on this day, or on this day here. But that is not me. That's not my trading. It's not my sell rule. So it's wrong to judge yourself on a different process. I'm not looking to do that. I'm looking to free roll into this first pop, sit for a testing action of the pivot, and then play it for a bigger move. Because remember here, I'm risk-free on the trade, subject to a very large gap down, loads and loads of slippage. I'm risk-free on the trade. I've removed all of that risk from the trade. So for me, it's can I now sit for a testing action, which I'm expecting to happen as well. I've done this 1,000,001 times. I'm expecting this to happen. So therefore, my stop loss kind of strategy and how I'm managing the position has to allow for that testing action. If I'm not allowing for it, then what am I doing? So I move my stop loss on this day here to break even on the remaining 2/3, which remember, it was already risk-free on the trade. So why am I doing that? Okay, we haven't seen the test and the reversal. What I then like to do is after this testing action, and then when I start to see the reversal, so imagine if my stop loss is here initially, and let's just make this line dark red. Imagine if my stop loss is here initially under this kind of dodgy final contraction in here, right? After this testing action, and then when we start to get the reversal, say it's in here, I'll just make this bar green or something like that, that arrow green. So when we then start to get this test and reversal, on that reversal, that there is then when I'm pushing my stop loss up to around about break even, maybe slightly above, maybe slightly below, depends how the trade's kind of playing out. But it's around this vicinity in here. Let me just kind of draw a green box. It's around this vicinity in here once we've had the breakout, test and reversal. That there is then on the remaining part of my position, which is usually 2/3 if I've been able to sell 1/3 in here to free roll. That's when I'm looking to push my stop loss from here up to somewhere in this region in here. Really depends how the trade has how the trade's kind of played out, where are the moving averages, where are prices, there's some shakeout demand tails, so on and so forth, right? So I move my stop loss to break even on the remaining 2/3. Now I get stopped out on that day there, which basically perfectly tests. I think the low of that bar was 23.77. So it undercut the pivot point that I was using by around about 9 cents. So I literally get stopped out on the low of this bar here. Why? There was absolutely just no reason for me to do that. So this is the test of the pivot point, and then the subsequent reversal. You can see the stock, it now looks really strong again, doesn't it? So it's on my radar to try and buy it back if it tightens up. See how it's now building this cup and handle. So this over here, if it tightens up over here, this is then an ideal opportunity for me to be looking to add back the 1/3 that I would have sold. And this is how you can then kind of get very concentrated in the strongest stocks in the market in your strongest positions. But what I did here, guys, was I just completely messed it up. There was no reason for me to move my stop loss to break even because I had not seen the reversal bar. Now in terms of reversal bars, say a bar like this, that there would be a reversal bar to me. So on this bar here, on this day here, is when I should have now been moving my stop loss either to break even or maybe just kind of underneath here, maybe underneath this demand tail on the 29th. That would be much better in terms of the trade management, because as I said here, okay, I'm trying to time the entries, free roll into the first pops. That may be the first kind of 3, 5, 7 day push. If the stock gets into high single figures, 7%, 8%, 9%, 9 times out of 10, I've been able to free roll that trade. Then can I sit through the testing action? So here you see it. Here's the pop. Here's the test. Here's then the reversal. Now I'm trying to ride the 10, 10, 21 EMA, potentially choking some off, lower the day, lower the day, lower the day. So here, imagine if you thought on over here is getting extended, lower the day, lower the day, lower the day, lower the day. So you're either stopped out there or potentially stopped out somewhere around here with part of the position. Depends how climactic it is, depends how kind of how price is obviously paying out the price and volume action of the stock. But that there, guys, hopefully that video is kind of useful for you to just understand having your sell rules in terms of the management of the trade. So there's 4 parts. There is identify, there's controlling of risk, so the initial controlling of risk, there's mitigation of risk, Sun Tzu, trying to position yourself beyond the possibility of defeat when prudently possible. I'll add that last bit to it, and then it goes into the optimizing profits, and that's where your kind of sell rules are going to be kicking in. So for my sell rules, okay, it is to try and sit through the first testing action. Now there are times when I have free rolled it into here, I try and sit through the first testing action and I get stopped out. It is gonna happen, but I'm trying to sit, okay? As Livermore said, it was never my thinking that made the big money for me, it was my sitting tight. So I like to try and sit for the reversal and then play it for a bigger move. I'm not interested in this shorter term 3, 5, 7 day pot. I'm not interested in it. I'm trying to sit for the bigger moves and then ride those intermediate term trends. So hopefully that video helps someone out there in terms of defining your own sell rules. You can see that I make mistakes as well when it comes to management of positions. Is it frustrating? Of course it's frustrating, but that's why we're always trying to learn from our trades. From every single trade, you actually learn more from the trades you mess up, whether that be a losing trade, whether that be a trade like this. I actually think these are the ones where you learn the most in terms of where you mess up the trade management of something. So hopefully it is useful for one of you out there. Thank you very much for watching if you made it this far, and I look forward to seeing you in the next video.